Hey guys, today is Friday, 9:47 p.m. So last night there was a huge news about the President Trump that he got the coronavirus. So this is something I want to talk about. That how is that going to affect the market, right? So today the market have sold off, not significantly, right? It is only down about 3%. It's a pretty significant correction, a 1 day correction, that is. But if you look at the Dow Jones, if you look at the S&P 500 E-mini, it hasn't really gone down that much. The only index that has reacted kind of more significantly to the news is the Nasdaq. Nasdaq has down by about 2.9% as of right now at 9:48 p.m. Friday. So actually, the market has closed. The future has closed. So the future stopped trading around 4 o'clock here. 4 o'clock right now. Oh, really? I think the future stopped trading around 5 o'clock today, and so because today is Friday, so right now the future is basically stopped trading. So as of 5 p.m. Friday, futures down about 2.9%, which is the tech sector has been hit the most, but that's kind of expected. The tech sector is more susceptible to news because the volatility in the technology sector, the volatility in Nasdaq is much higher than the S&P 500 and the Dow Jones, just on average. So that's what we expect. So and if you look at the overall market, I think most of the stocks are pretty stable, and they sold off in the morning and they recovered, throughout the day. That's what happened. That includes cryptocurrency sector. That includes Ethereum, Bitcoin. They sold off a lot in the morning, but they almost recovered completely by the end of the day. And I want to talk about how this news that Trump got the coronavirus could potentially impact the market in the short to medium term. In my opinion, the first we should look at is how this kind of events perform, how the market performed under these similar events in the past. Okay. And how the market performed under more severe events in the past. That's something we can even take a look at. For example, the JFK assassination, right? 1962 November, I believe that was November 20th or 22nd, the JFK assassination. How did the market perform back then? Did the market crash eventually, or did the market recover? And obviously, the assassination of JFK is a good example where we can compare to. Because at least Trump is not dead, right? JFK assassination. If the president is assassinated versus the president is passed away due to illness, I think the assassination is obviously more severe case than the illness, right? So we can take a look at the case in 1962 and how the market reacts to such events, which could give us a clue of what is the probability of the market movement going forward. So let's take a look. Okay, so I'm going to bring up the Dow Jones Industrial Average. I'm going to remove my drawings. So let's take a look at 1962. Let's go back. Let's have a time machine and go back to 1962. Imagine you were trading there. During 1960s, since 1962, this July 1962, you can see that by October 1962, the market has been in a bull market, right? I'm sorry, so the JFK assassination was 1963. I apologize. That was November 22nd, 1963. So 1962. That's why I was looking at the chart. I was kind of confused. So 1962 March, there was a sell-off between 1962 March 1962 to June 1962, and this was a almost a 30% downturn from the top. Actually, yeah, almost a 30% downturn from the top. And this is actually something kind of similar to what happened between February to March this year, right? If you look at this from February 2020 to March 2020, we had a huge sell-off of 30%. And this is a similar magnitude, except the sell-off was much slower, which is expected. If you actually measure from this to this point, from the March 20th, 1962 to June 18th, the sell-off is about 3 months. And for us, the sell-off was only about a month. Was a month and a half, actually. Was half the time, but the same magnitude. But afterwards, the market had a significant bounce from the sell-off, right? So if you get back in here, let's compare daily chart. You can see that after this 27% downturn in June 1962, the market went on with a huge rally all the way to 1,000 points almost. From the bottom of 500 points, the market basically doubled. And that was for the Dow Jones, and that wasn't even, NASDAQ didn't even exist yet. So if NASDAQ did exist, if there was a tech sector back then, I imagine NASDAQ probably went from 500 points to 1,500 points, 3 times the multiple at the top, because NASDAQ is usually a multiple of the Dow, right? It's much more volatile, and you can see that by 1963 October, it has made an all-time high. It actually went over the previous high, which is actually kind of similar to what we have right now in the S&P 500. I'm going to bring out S&P 500 because it's a more comparable index to the Dow Jones. So let me just bring up the S&P 500. I'll remove these drawing. You can see that we're in a kind of similar situation here, where we had a sell-off at roughly this level. We came down. It was a 30% retracement. The market is actually set up very similarly between from 1962 to 1966, and even compared to today, right? If you look at this, and we have just went over to the high, you can see that here, and we came down. So basically, if you look at this, at the 1963 October 29th, the market made an all-time high in Dow Jones. And similarly today, September 3rd, 2020, we made an all-time high. And then the market corrected a little bit. And at close to the correction at the bottom, you can see there's a huge spike downwards. And that is not an error in the data set. This is actually not an error in the data set. This is actually what happened. This was the day when JFK was assassinated. The market actually limited down to the downside. But eventually, but you can see the next day, very next day, right? On the day of assassination, market crashed. But on the next day, the market completely recovered, and that was the bottom. That was the bottom of this small correction here. So today, although it looks like we have reached this point before the bad news, but you can see the market came down and it recovered. I think what we're having today is kind of similar to the 1963 situation, where we had a really bad news at this point, and JFK assassination was much more severe than Trump getting a cold, right? And you can see that even during that time, even that hits the market, it didn't really stop the market. It didn't really stop the bull market. Actually, the bull market continued. It continued all the way from that point. That was the bottom. Like that was literally the bottom. That was literally the dip you're supposed to buy, right? You did not, if you didn't buy this dip, too bad, right? You're gonna be buying higher and higher and higher all the way until 1966, actually January, until 2.5 years later. Actually, 1966 is about 2 years later than November 1963. Until 2 years later, you get to buy. Until 2 years later, that's when the market actually stopped going up. And so, my just based on the historical event, based on how the market behaved historically, right? This is not my opinion. This is actually what happened. I suspect that market would behave the same. I suspect right now we're doing a correction, and this was the bottom of this correction. This was a dip, and if today was another dip that we can have, maybe on Monday we have a much severe correction, but definitely use that opportunity. If the market does come down, we should start putting more money into the market. If you haven't, I've bought a dip here, so I'm not buying more here. But today, some of my stocks actually down quite a significantly, and I was able to, pick up more shares. I'll buy more just to kind of average up my portfolio. I'm increasing my leverage actually in this environment for some of the undervalued stock. I believe that could be much more valuable as this bull market goes on. And never underestimate how long this bull market can sustain. With a 34% retracement, with a 30% retracement, historically speaking, the bull market can last about 2 to 3 years. So any of these dips that we have right now from all-time high is the dips that we should buy, right? Which is dip we should buy. And this is another 797 days after the dip, after this bottom of the JFK assassination. And if you are looking at to buy this level, let's see if historically the level. Okay, so you have to wait for. So if you did not buy the stocks, buy your shares, on the day that JFK was assassinated, to get the same deal, you have to wait for another 2,360 days. You can see that if you miss that dip, to get that same level again, you have to wait for 2,360 days. That's almost like how many years? That's almost 8 years. 7 years, right? 2,360 divided by 365. That's 8.9 years. Sorry, 365. That's 6 years, 6.5 years of your life waiting just to get back into the market at the same level. I absolutely, unless you don't value your time, I absolutely go against that. So if you are thinking about adding more stocks to your portfolio, if you have some extra cash on the side, you're willing to deploy right now, in my opinion, is the best time. Right now, in my opinion, is the best time. Okay. It's not the best time. The best time was in March, but right now is another opportunity that you can add. Some of the stocks are down significantly from the top, from this level. And today, with this bottom seems to be formed, I think this looks like a very legitimate bottom. I highly recommend buying more shares if you do have the extra firepower on the side. Okay, that's all I want to talk about regarding to how I interpret this news that President Trump got the COVID. In my opinion, is an opportunity to buy the dip. Okay, it's not an opportunity to sell short the market. If you sell short right now, I think that's just really, really stupid. It's just really, really stupid. I was looking at my stock market chat group. Some guys are talking about buying the TVIX, buying the VIX, buying the UVXY. I think the bad news already came out, guys. The bad news already came out. The market has already discounted this, right? If you're selling short right now, you're gonna get rammed over. You're gonna get run over in the next couple of days. I guarantee the market is going to do a V-shaped recovery. I'm not going to guarantee, but my hypothesis is that we're gonna hit all-time high by November, like no matter what. We're gonna hit all-time high by November, no matter what. And if you are shorting this market, you are going to be punished. Okay, you are going to lose money, no doubt. Okay, and that's my opinion. No doubt in my mind, but if you think you can short this market, go ahead. Okay, short this market. Well, the market will eventually calm down, but it took about 6.5 years to calm down from the 1960s, right? So you will be waiting, losses for a decade before the market turns in your favor. And you can see that at that point, if you didn't buy the dips for JFK, you only had a very small window of opportunities to buy at the same level a decade later, almost a decade later. And maybe another opportunity to buy at 1974. Basically, if you didn't buy this, enjoy the bull market between the 1960 bull market, you will be, if the market came back, you can see that here. This is an interesting observation. The 1960s marked the beginning of a bear market between the 1966 all the way to 1982. So if you didn't really catch the last wave of that bull market, and you're trying to, invest for the long term between 1966 to 1982, which is about 15 years of time, you would be losing a lot of money. Like long-term investors basically got wiped out between the hyperinflation period between 1966 to 1982. So just give you guys a historical background. During this period, there was a oil shock. There was a lot of hyperinflation going on in the United States. That's why the Federal Reserve was not able to provide a lot of liquidities. They were actually doing a lot of liquidity contraction. And when you're contracting liquidities, it's never good for the stock market. And so high inflation is bad for the stock market. High inflation in the high real inflation. I'm not talking about monetary inflation. I'm not talking about asset class inflation. I'm talking about inflation in food, inflation in gas you're paying, inflation in electricity, inflation in the lumbers, the lumbers you're building your house with. If you have high inflation in real goods and services, inflation in food, the Federal Reserve is going to be forced to restrict the monetary supply, and you're going to have asset price deflation, and that is never good. So during the 60s, you can see that there was a huge bull market between 1940s to 1960, 20 years bull market. The market went up by 10 times, right? Similar to today. So by looking at this kind of structure, I think we're actually close to the end of the bull market if the inflation does come back. If the inflation does come back, it's never good for the market. So we should be watching the actual inflation number very closely to kind of estimate how long this market can sustain itself. Okay, and that's all I want to talk about regarding to the Trump getting the COVID. I don't think it's a big deal. I don't think it's going to have a negative impact on the market in the medium to long term. I think right now it's time to buy dip. That's my conclusion. Okay, and so that's it. That's all I want to talk about today, and see you next time.